Forex update for December the 4th. It's Thursday. We are looking at Euro US dollar doing pretty much what it's supposed to do, remaining in the bear trend. So this trend line's done its job all week, last week and this week. It's worked quite well as we were selling off that resistance level and then looking for it to come lower. So that has worked. Yesterday we broke below the November double bottom lows at 123.57, so that's adding pressure. We didn't quite get to our target of 122.90.85. We only got as far as 122.99, so we've missed that by just 9 pips, but the market remains under pressure, so there's no reason why we can't see that today. And of course you've got other levels to trade off on today's report. Cable is more stable. Over the last 3-4 days we've really just held this range you can see there. In fact, we've really just been going sideways through the last 2 weeks of November and into the first week of December, apart from this little blip higher. There's nothing to say this is going to turn around and rocket. I think it was just a case of unwinding the oversold situation. I think sooner or later we'll probably continue lower. The dollar does look like it's strengthening. It burst through 4-year trend line resistance this week, so all looks positive for the dollar again after hesitating a bit through November, and I wouldn't be surprised to see cable get caught up in that strong dollar eventually. For cable, updated every day on our sheets of course, and the Aussie dollar also looking negative. Stronger dollar there definitely taking effect as expected, so we're sticking with the bear trend there. Any rally is a selling opportunity. We could get a small recovery just because we are getting quite oversold, but I still favour the downside. So any recovery, if we are lucky enough to see it, is just a selling opportunity. You've got resistance levels on today's reports to use as selling opportunities, but I think this bear trend will continue and it's safer just to stick with that. Dollar yen has been working nicely for us for quite a long time. We've been buying into dips and just sticking with that bull trend. No reason to change that strategy. We've hit our targets. We tend to hit them, hover, and then push higher again, and we've hit yesterday's target nicely up there at around the 1990 area. So we're just going to stick with that, keep looking for it to push higher, buy into dips. There's no reason to change it. Obviously we've got all the levels on today's report. Dollar versus the Canadian is the only pair that I'm slightly unsure as to whether the dollar can continue higher. We've got this double top pattern with a couple of negative candles right at the double top. The last few days we've gone sideways, so it really is volatile, showing that bulls and bears are really having a battle here to try and gain control of the market. Bears obviously think they can seize control, but bulls are not giving up without a fight. You can see with these big candles, wide ranges, lots of volatility, but not actually getting anywhere at all. So it's a question of waiting for the breakout and see which way we go. Aussie yen, Aussie dollar versus the yen. Well, it's holding decent support around the 120, 100.00 mark, as you would expect it to. That's been just trading sideways, so we've been trading that range and that's worked quite well. We're waiting for the market to turn around and rally up again, continue that longer term bull trend. I think that's the most likely scenario now that the overbought situation has been unwound. However, if we do break below 99.90, that is going to add a bit of pressure. You've got targets on the day's report to look for, but any dip to our support levels I think is a buying opportunity. I do not see this as a trend changing situation at the moment, and I do think the bulls will eventually regain control. Euro versus the pound has been in a range now for 2, 3, maybe even 4 months, just going sideways since the summer. Recently we've dipped back below the 100-day moving average. In fact, yesterday that held perfectly and we collapsed a little bit further than I'd expected, to be fair, but we're now about to test, or we're just hovering above this trend line around the 78.25 area. That could hold the downside. We're becoming oversold on the daily chart, and when you're oversold in a ranging market, that can indicate that we are about to turn up, and considering we're just sitting above that trend line support, there's a good reason to think that will probably be the case. We've got targets on today's report, of course. However, if we do break below 78.20, we could then test these November lows around the 77.95 area, and of course below there we've got these September, October lows around the 77.60 area to look for. As I say, I favour probably a recovery now, and maybe heading back up to this area where you can see some congestion, and the 100-day moving average as well around the 79.10-15 area. If you are not already a subscriber and you'd like to learn a bit more, our website is daytradeideas.co.uk. This is it, you can see it here. If you scroll down you can see that we have my Twitter updates here. Twitter handle is @daytradesignals. Please do follow me if you're not already doing so. Plenty of reviews here and tweets from our clients and followers. If you keep going down, you can see the markets that we cover. About 30 markets we cover, only $49.99 a month, so very easy to subscribe. Get a daily report every morning out by about 3 a.m. GMT. Gives you a complete rundown of what's likely to happen in the markets with trade ideas, all the important support and resistance levels, target, stop loss, everything's done for you. Saves you doing all the analysis. As you can see, we cover Forex, commodities, stock index, and even fixed income. We have lots of free stuff on there. Videos at the bottom of the page, and we even post free reports on here quite regularly so that you can keep track of what we do and how we explain where we think the markets will go. This is the page. If I scroll down, you can see that yesterday we posted corn, wheat and soybeans, our grains reports. All you've got to do is click on the view button to see what we said, see how it turned out in the market, and if we got it right. Keep scrolling down, and each day you can see we generally post a selection of our reports for free. These are the exact same reports that our subscribers see every morning from about, as I say, 3 a.m. in the morning, so you can view those, keep up to date with what's going on, and put us to the test, see how accurate we can be over time.